Hey everyone, and welcome to Mind Talks AI podcast, generated by artificial intelligence. Today I want to dive deep into something really significant happening in the world of metals and mining, specifically focusing on Indonesia's nickel sector. I've been looking closely at a new government regulation. It's officially Indonesian Presidential Regulation number 19 of 2025, often called PP19 Tahun 2025, and it introduces some major changes to the royalty tariffs for nickel products. We're going to focus just on the nickel aspect today because, honestly, there's a lot to unpack there. Now, what immediately struck me when I reviewed this regulation is that the government isn't taking a simple one-size-fits-all approach. The royalty tariffs vary quite a bit, depending on the specific type of nickel product we're talking about. It's a pretty nuanced system, so let's unpack this together. Where do we start? Let's begin with the raw material, nickel ore, or BG nickel as it's known locally. What's really noticeable here is the tiered system the government has put in place. What do I mean by tiered? Well, for nickel ore, the royalty isn't just a flat percentage, it's graduated, meaning it changes based on the HMA price. That's the benchmark price linked to high moisture content, calculated per ton. So there are different price brackets. As the HMA price for nickel ore goes up, the royalty percentage the government takes also increases. Let me break down the tiers for you. If the HMA price is 18 United States dollars per ton or less, the royalty is set at a significant 14.00%. Think about that, 14% right off the bat, even at lower price points. That's pretty substantial. If the ore price climbs to between 18 United States dollars and 21 United States dollars per ton, the royalty bumps up to 15.00%. In the range of 21 United States dollars up to 24 United States dollars per ton, it hits 16.00%. It climbs again to 18.00% for ore priced between 24 United States dollars and 31 United States dollars per ton. And finally, if the HMA price for nickel ore reaches 31 United States dollars per ton or even higher, the royalty maxes out at a hefty 19.00% of the price. 19%. That's quite a steep progression, isn't it? To me, it definitely suggests the government wants a bigger slice of the pie when nickel prices are high. But here's something I found really critical. A really important exception: low-grade ore. If the nickel content in the ore is low, specifically 1.5% or less, and if that ore is used as raw material for certain domestic downstream industries, the royalty tariff drops dramatically. It is 2.00% of the price. 2%. Compare that to the potential 14% or even 19% in the standard tiers. That's a huge difference. So what's the big takeaway I see here? It looks like a very clear incentive. It strongly suggests the Indonesian government is pushing hard to encourage building up its own domestic nickel processing capabilities. Make it cheaper to process locally, right? By making it much cheaper to use this locally sourced, lower-grade ore for specific domestic industries, it is likely aiming to add more value inside the country rather than just exporting the raw dirt. To me, that makes perfect sense. Discourage raw exports, encourage local factories. Okay, so that covers the raw ore. What happens once it's processed a bit? Let's talk about nickel pig iron, or NPI. How do the royalties look there? Well, similar to the ore, NPI also has a tiered royalty structure based on its HMA price per ton. Still tiered, yes, but the percentages are generally lower than what we saw for the raw ore, lower across the board. Here's the breakdown for NPI. With an HMA price below 18 United States dollars per ton, the royalty starts at 5.00%. That's a big drop from the 14% starting point for ore. Definitely a significant step down. Between 18 United States dollars and 21 United States dollars per ton, it's 5.50%. For the 21 United States dollars to 24 United States dollars range, it's 6.00%. From 24 United States dollars up to 31 United States dollars, it's 6.50%. And finally, when the HMA price is 31 United States dollars per ton or more, the NPI royalty hits 7.00%. So 7% at the top end for NPI. The tiered system is still there, adjusting with the market price, but the whole scale is shifted lower compared to the raw ore. It reflects that initial processing step, adding some value. All right, moving further down the processing chain, let's look at nickel matte, This is another intermediate product, usually with a higher nickel content than NPI. And, you probably guessed it, the royalty structure here is also tiered by HMA price. What are the numbers for nickel matte? They step down again. For HMA prices under 18 United States dollars per ton, the royalty is just 3.50%. Even lower. Between 18 United States dollars and 21 United States dollars, it's 4.00%. In the 21 United States dollars to 24 United States dollars range, it's 4.50%. From 24 United States dollars up to 31 United States dollars, it's 5.00%. And it tops out at 5.50% for HMA prices of 31 United States dollars per ton and above. 5.5% max for nickel matte. Interesting. So another step down compared to NPI, and way lower than the raw ore. The incentive pattern seems pretty clear, doesn't it? Further processing seems consistently rewarded with lower royalty rates. Now let's quickly touch on ferronickel, or Fe. How does that fit in? It follows a very similar tiered pattern based on HMA price. The rates start at 4.00% for prices below 18 United States dollars per ton. Slightly higher start than nickel matte, but still low. It goes to 4.5% for 18 United States dollars to 21 United States dollars. Then 5.00% for 21 United States dollars to 24 United States dollars. And 5.50% for prices 24 United States dollars up to 31 United States dollars. Finally, it caps at 6.00% for prices 31 United States dollars per ton and higher. So again, consistent with the trend, generally lower than raw ore, still tiered. Okay, here we go. Now, the regulation also lists quite a few other specific nickel compounds together in one group. This includes things like nickel oxide, and crucially, nickel mixed hydroxide precipitate, or MHP, which is a really key intermediate now, especially for batteries. Also in this group are nickel hydroxide cake, or NHC, nickel sulfide, and even some related products often found alongside nickel, like cobalt hydroxide, cobalt sulfide, chromium oxide, etc. It's quite a list. And what's the royalty situation for this entire group? Is it tiered too? No, actually. For this whole group, the regulation specifies just a single flat royalty tariff. And the rate? It's 2.00% of the price. 2%. A flat rate, regardless of price fluctuations. And notice that's the same low rate we saw for that low-grade ore exception when used domestically. To me, this really seems to double down on encouraging these more refined, downstream nickel products within Indonesia, likely aiming to attract investment in those specific processing sectors. Okay, finally, let's go to the very end of the processing line, pure nickel metal, or logam nickel. For this, the ultimate processed form, the royalty tariff, is set at the lowest level I've seen anywhere in this regulation, and that is just 1.50% of the price. 1.5%, that's the bottom. It really underscores that strategy of encouraging value addition, doesn't it? The most processed form gets the lightest royalty touch. So if I step back and look at the whole picture, I can trace a clear path. Highest potential rates for raw ore, 14 to 19% tiered, stepping down through intermediate products like NPI, 5 to 7%, nickel matte, 3.5 to 5.5%, and Fe, 4 to 6%, all with tiered structures linked to market price. Then hitting low flat rates, just 2%, for key compounds like MHP and nickel oxide. And finally, the absolute lowest rate, 1.5%, for the pure metal. That tiered structure for the ore and intermediates, based on the HMA price, also adds a dynamic element. The government's take adjusts with the market, and that low 2% rate for low-grade ore used domestically just jumps out as a key policy lever. Okay, thanks for tuning in and letting me walk you through the details of this new regulation. I hope you found this breakdown insightful. Don't forget to subscribe if you want to stay updated on topics like this. I hope I was able to fulfill your request.